Welcome to this video. In this video, I'm going to be making a stock analysis of LVMHF. If you know what they make, they sell luxury goods both in jewelry, spirits, and clothing. Louis Vuitton, Tiffany, Moet, Hennessy, so they're in that price class. And right now, I like this stock quite a lot for one reason. It is so cheap. Now, actually, let me just make this graph a bit bigger and make each candle a day. As you can see right now, we are trading quite low given that we had a huge top up here in April of 23. And right now, it is in what I would like to call value stock territory because, of course, right now, inflation is quite high in most of the world, so people really aren't buying that much luxury goods, especially not in China, which is one of Louis Vuitton's biggest markets, and as well as Tiffany's. Of course, they're still doing decently in the spirits, both with their Moet and Hennessy, because people still buy alcohol, but the main problem is luxury goods. Now, currently, it is lying quite low, and as you can see, we're actually just on some earlier support levels right here, which of course not see that it follows the technicals. Now, it has to break through this up here properly, but chances are we're not going to see that yet, and I do think it's going to be falling even more. But I do like the stock because once the Chinese consumer gets a bit more comfortable, it's going to boom absolutely insane. The one reason I do think a company like LVMHF and a company like Kering as well in the luxury brand has been falling so much is because simply the Chinese investors, and not investors, consumers are quite worried at the moment, and once they return to their normal form, it is going to pop absolutely crazy. So I do like the company as a value investment at the moment, and I think you shouldn't buy this just for the day. If you buy it now and hold it for 10-15 years, you're going to make absolutely crazy gains on it. But of course, remember, this isn't financial advice, it's purely for entertainment and educational purposes. This is just my opinions. And as you can see, it is quite a huge company with a market cap of $289 billion, and it has a decent beta at the moment. At 1.5, it's usually lower, but it has been quite more volatile recently than it usually is, and beta is how volatile a stock is given the normal index. Now, the price to earnings on this is absolutely crazy. As you can see, it's 21, which is so low for a company like this, which I love to see, and their EPS is quite decent. Now, as you can see, the dividend yield of this is decent at 2.7, and as you can see as well, they pay them out regularly, as you can see right here, both in April and in December, and in April again, and in December, so 2 times a year, which is quite nice because this is more easy to get a dividend snowball rolling. Now, I do prefer 4 times a year, but 2 times a year is better than once. Now, let me make these candles normal again so we can look at the technical short term. As you can see, we have still been falling quite a lot, and as you can see, we do see a bit of a bottom formation here, which we have regained a bit from, but then we see this poor earnings here, which of course isn't great, but overall, I do like the stock in itself. Now, the dividend info on this, as you can see, all the way from 2000 and 2019, it has increased its dividend more and more. Great years. So chances are we're going to see, if this is a poor year as well, last 24 was, chances are we might see them decrease their dividend a little. But chances are we're also not going to see that, because if they reduce it, of course, investors are not going to like that, because a lot of people have this stock because it pays out great dividends, but we're going to have to wait and see. Now, annual earnings, as you can see, it's absolutely crazy. They rake in billions and billions of dollars. And here you can see how they make their money. It's in fashion, leather goods, selective retailing, watches and jewelry, perfume and cosmetics, so on and so forth. The thing that's taking the biggest hit on right now, as you can see up here, that is the fashion and leather goods. They're down almost 4 billion from 2023 to 2024. And they're seeing a small hit everywhere else. But as you can see, wine and spirits also a bit down. And other holding companies has increased a bit, which is nice to see, but overall it is a bit down. As you can also see down here in the earnings, as you can see, 95 billion in 2023 and 87 billion in 2024, and the net margin as well is down by almost 3%. Now, the performance of this stock, let me just make it a 10-year graph. As you can see here, it's very, very nice. As you can see, we have some poor years. Of course, we have 2022. Basically, every single stock lost that year. This year is not great, and last year is not great either. But overall, in that, last 10 years has been absolutely amazing to own this stock, and I do love this stock myself, as I've been saying. I don't own any at the moment, but I am waiting to see if we can get some better technicals. Once we get a bit more sideways trading, I'm definitely going to buy in. I don't really care if it's going to fall more, because if you want to buy a stock, just buy it and don't wait for it to do anything. But I rely quite a lot on technicals, so I'm waiting to see if the technicals be a bit better. We're trading either a bit more sideways or a bit more lower, trading downwards, but it has to be a very, very nice graph and not this bumpy shit. I don't like that at all. Now, technicals for the day, as you can see, is a buy, and for the month, it is a neutral, which is nice to see, of course, because we did see this bottom formation here, and it has been moving upwards, which is great to see. And the analyst rating on this are quite nice. 11 strong buy, 4 buy, and 11 hold. As you can see, overall, the average performance is up by 13%, and the max is up by 46%. I do think this is quite realistic. However, I do think we need a longer time frame than 1 year, so which is usually what the one that these guide within. So I do think it's going to increase quite a lot more than that, but I do think it's going to take some time. I do think we're going to see the end of the year about where we are currently trading, maybe even a bit down. I do think this is a bit more realistic. But I do think next year, if inflation falls as it has been in Europe and other countries, especially in Japan and China, we are going to see it boom. And I think 2026 is going to be a great year for this stock. They're also estimating their EPS is going to increase after this year. As you can see, 2026 is better than 25, and they're increasing their EPS estimates and as well their annual earnings. If you like this video, please don't forget to leave a like and subscribe. And if you want to see more videos like this, please leave the companies you want me to analyze in the comment section below.